YouTube family, back again with another video. Today I'm going to be breaking down how to backtest around high impact news events. Okay, now a lot of traders that get into trading believe that they can just coast through with technical analysis and don't really factor in the fundamentals. Okay, now when there's high impact news releases, especially certain ones I'm going to speak about in this video, you're going to understand how it actually affects the markets and how the market conditions change. Now, when you're trading every single day as a beginner and not factoring in the fundamentals, you could end up in some problems. So today, I'm going to show you how to actually navigate these times in the market and what you can actually do to be a benefit and understand that you're not actually missing out on anything. So hopefully with this video today, it can help you with your understanding of why you want to avoid trading around these events and actually come back when the market conditions have settled. And if you do have FOMO, I'm going to show you reasons why you don't need FOMO and how you can actually save your account. Okay, so let's get into this video. Right, people. So in today's video, I'm going to be going through the economic calendar with you guys and why it's important to have one eye on it, especially when you're trading pairs which involve high impact news events around that specific economy. Okay, so today is federal interest rate day. So the FOMC, which is the Federal Reserve Committee, have got a decision to make with the next interest rate. Okay, so looking at that today, I'm not actually taking any trades today because we have in 4 hours time. So by the time this video comes out, we would have had this news release. But what I'm trying to get at is with it being so highly anticipated, it's really important that you understand that most of the big players, okay, the people that move the markets, they are waiting for this data. Okay, now for those that are beginner, I don't want you to get too carried away with fundamentals, but you still need to have your eyes on high impact news releases because they do have a very, very big influence in the market going up or the market going down. Okay, especially when it is a surprise result or something comes in better than expected or worse than expected. So, with something like the federal interest rate decision, okay, this is set by the central bank of the US, and if they drop the rate, it's going to have an effect. If they increase the rate, it's going to have an effect, okay? Because every bank below them, in terms of the borrowing, comes from the central bank of each economy, of each country, excuse me. So they're saying, right, that the consensus is 4.5. Last month was 4.5. And they're saying that they might keep it the same. Now, when they keep it the same is one thing. They always have a press conference as well regarding the decision to either change the rate or keep it the same or raise it. So when that happens, okay, anything involving the dollar, so any of the majors, gold, sometimes the stock market as well is going to be affected, right? Because companies have to adjust, banks have to adjust, and so forth, okay? So when there's news like this, you're normally going to find in the chart, and I'm going to show you, right, what normally occurs in and around the decision. Nothing really comes from it that is worth getting involved in. Okay. Now, if you have a predetermined area of interest leading up to the news result, that's a little bit different. You can choose to interact and engage in that, right? But this is something where the biggest of traders are waiting for these type of results. Okay. Now, if you are new to trading, definitely check out the economic calendar and filter it just to high impact news. Okay. We don't care about medium impact. We don't care about low impact. Okay. So filter it around pairs that you trade. If you trade the euro, you want to be in tune with any euro news coming out. If you trade GBP, you want to be in tune with that. If you trade USD, you want to be in tune with that. If you trade CAD, Aussie, whatever it may be, you want to be in tune with federal interest rates to begin with. Then you're going to look for the inflation data. You're also going to look at the unemployment data. And then you've got things such as the PMI, which is the manufacturing, and the GDP, which happens every quarter. So those are the main factors in regards to whether what's it called, a central bank is going to change the interest rate decision. They're going to look at the data to see how the economy's health is doing. Now, this isn't something where we have to look at it for a year's time. We're only really interested month by month. What it means for us as day traders, what we can potentially see. So don't feel like this is some forecast for the next year of what I think the market's going to do. I'm not interested in a year's time. I'm interested in what I believe the market is going to do now. Okay. So when we go into the chart, okay, the federal interest rate, and right now we have the dollar pushing higher. Now, the reason for that is because we had some GDP, which is showing that the GDP is grown. So with the GDP, what that measures is how well an economy is doing in terms of, is it growing or is it shrinking basically. So last quarter the GDP was -5. Today it's 3%. Okay, so it's beat the consensus, meaning it's beat what the economists predicted it was going to be, and it's going to be deemed positive. So that's one of the reasons why the dollar is pushing how it is pushing. But nonetheless, I'm more interested in what the interest rate decision is going to be. So if we go back, what I'm going to do is go back each month. Now, each month you're going to get an interest rate decision. Okay, so if we go back to the month of June, we're going to check for when the interest rate was in that month, and we're going to look and see how the market reacted. Okay, so here we are here. So in June, okay, at 7 p.m., again, last month they didn't change the interest rate for the US dollar. Okay, so we're going to go into the chart and look around June at that time to see how the market was reacting. Okay, so when you're looking at news events, you want to see what type of price action you're getting. So let's go into that chart. Right, now going into the chart, the easiest way for you to basically get to that calendar date is to click on this calendar here and go to the month of June, and you want to be going to the 18th because that's when it was, and then you can filter in the time of the release, okay, because that's all we're really interested in. So let me do it an hour before, okay, just to kind of get our bearings and stuff. Okay, so here we are on June 18th. Let me get a highlighter for you guys. Okay, June 18th, which is right here, and we're looking at 7 o'clock. So this is what is happening right here. Okay, and let's go down in time. Hopefully we can go to like the 5 minute. Are we able to? Yes, perfect. So going into that, right, we want to look on the smaller time frames just so that we can see and understand what was happening in and around the release. So it released at 7 o'clock. We had the market nosedive down, okay, and then after that nosedive down, we then saw the market continue up, and then we went into a consolidation going into the Asian session. Okay, so what we have to understand is that we have reasons showing why the market was coming down. We can see that this liquidity was swept before it started to push higher. So that's the manipulation that a news event, a high impact news event, can bring. And why you need to be aware of that is because this is normally the case for most high impact news events. So you don't want to be trading leading up to this because you don't know what it's going to do. You don't know how far down it's going to go. You don't know if it's going to fly up first and come down. Like, they're all different. No news release, no high impact news release has the same reaction. Sometimes it's very manipulated where it's chopping both ways. In this instance, it was literally a grab of these lows from people that was buying earlier in the day, and it pushed up after that. So when you have a general consensus, okay, hopefully you have a bias in mind leading up to what you think the market is going to do. You kind of want to let that play out. Okay, now going back to the bigger time frame, going back to that date. Okay, so the June right here is where that was occurring. So this is where that happened, where it pushed upwards. And then we can see going into the Friday, it came back in and around the area. And then Monday actually rose up and then we started to drop. So what you have to understand, guys, is every time you get a news event, you want to basically check to see what type of reaction you got so that you can start to get familiar with the price action. So you can start to get familiar with what occurs in and around these news releases, right? So Wednesday, the 11th of June, you had some inflation data, which again is very important right now because the Federal Reserve is going to be influenced in potentially everything is connected, right? The Federal Reserve checks to see what the inflation data is looking like, and that can potentially influence the decision to either lower the rate or keep the rate the same or raise the rate. So where we had such high inflation like 2-3 years ago, it was super high, 5, 6, 7%, right? We've seen it steadily drop, but they still have a target in mind of 2%. So on the 11th, we had the core inflation come in where they thought it was going to be 2.9, and it was actually 2.8. So it dropped a slight bit, tiny bit. It's dropped, right? Which is deemed. It says negative here, but it's not a worse than expected result. It's just a lesser value, so they deem it that. But a lower inflation rate is actually better for the dollar, right? So let's go to the 11th of June, okay, to see what time it came out as well. 1:30. Okay, so if it's 1:30, I'm gonna go on the 30-minute, so we can see. Right, so 1:30 right here, 11th of June. Yep, 1:30 is right here. So this is what happened going into that inflation data. We started to see the market flood down. Okay, so what is important to note here is what type of reactions you're getting. Let's see if it can allow me to go. Yeah, cool. This is what happened. So look, it flooded down super heavy. So the dollar actually got weaker even though the inflation dropped. So what could be deemed a positive, right? Because a lower inflation rate is a positive for the economy, because that's what they're trying to reduce at the moment. It should be deemed a positive. So think about people that would look at a lower inflation rate and say to themselves, okay, cool, the dollar's going to get stronger because the data is effectively showing a better result. It done the opposite. So why you have to mix and blend the fundamentals with the technicals is because the technicals are going to show you what way the market is trying to head overall anyway. But the news is going to be the volume driver. The news is going to be the reason the market heads lower. Okay. Now, if you're not familiar with any of these terms, right, definitely look to get involved in my free community, right? The link is in my description. You're going to basically find beginner information as well as advanced information as and when you get up to speed for all of these little things in regards to the module section that I've got in there. It's all completely free. Click the link in my description to join that, okay? But what I'm basically getting at is when we start getting our technical analysis up to par with fundamentals, we're going to know what conditions make sense to trade in and what conditions don't make sense to trade in. So going back to the 1 hour time frame around the inflation result, right? What you'll find is leading up to it, so the whole of Monday, the result came out on a Wednesday, okay? What we have to look at is from Monday, what was we having, what type of price action was we getting, okay? So this is Monday. So I'll do it from the open, okay? So the open is right here, this black candle right here. That's the open of the new week. So we had a range created, okay? We had a range created going into the Monday. Market went upwards, okay? Going into that Tuesday, we went to the lows of this range again. We didn't break lower. And then we go into the Tuesday here, the Asian session here. And then if you look at, let me just widen this quick. If we look at going into the Wednesday is when the inflation data is dropped, and that's when we actually break out of this consolidation. So what I'm basically getting at is with this anticipated news, we actually saw the market start to range, okay? Now, the reason for that is because the big traders, right, the institutions, they're waiting for this data. They don't know what the data is going to be. There's a consensus of what it's going to be, but that's not a given. It's not a sure bet. It's not guaranteed that it's going to be working out in that fashion. Okay, so we have to factor that in too. But what I'm getting at here is if you are seeing the market range, right, these are not optimal conditions for you to actually be a part of. Can you make money when it's going up and down? Of course you can. But what you have to realize is the market was waiting, right, for the inflation data to actually start trending from that news event after that. Okay, so it's really important that we're in tune with the fundamentals coming out week by week, because let's say you're a trader, right, and you don't look at the economic calendar at all, and then you're noticing the market going sideways since Monday, since Tuesday, you're seeing it go up and down. If you didn't know or you didn't factor in that the news was coming out Wednesday, you wouldn't actually make sense of why it's going sideways, right? Nothing ranges by accident. The market's ranging because it's building up liquidity, right? But it's also anticipating these news releases. So for a beginner or someone that's just getting into trading, right? Yes, you need to get better in terms of understanding the market and understanding what your concept is or what your trading plan is to buy and sell, right? Yes, you do. But you also have to factor in when it makes sense to trade and when it doesn't make sense to trade. The catalyst for this market heading down lower was the inflation data. Okay, that's what you have to realize. That was the catalyst for it. Now notice when we went down, okay, going into the Thursday and then the Friday, going into that new week, Monday, Tuesday, Wednesday, this was going into when the interest rate was. That's that same candle that I was highlighting here. Okay, the market pushed upwards, and then going into the next week, Monday, it pushed up to then push down. If we take this range here, what do you notice about that? What have you noticed that the market has done? We had the range from the inflation on the 11th, which was coming out. It took out the bottom of the range and didn't take out the top of the range. The next week, it took out the top of the range, and that was the catalyst for the market to drop. Okay, so it's really important that you study that, because you'll start to notice patterns in and around news events as and when they come out. So what I'm saying is, trade when the market is trending, trade when the market is retracing. When the market is consolidating, it means that it's indecisive. It means that it's not optimal conditions. Okay. Now let's look at some other economic dates. So we can go back to the month of May, and we'll look for, we'll look for another interest rate. Okay. So what do we have? Okay, here we go. So the 7th of May, we had the interest rate. Okay, so they haven't changed the rate since May. June has been the same. Now, July, we're going to be getting it in a few hours, and they might not change it again, right? So what we have to realize is, okay, it's not a decision they take lightly in just changing the rate to make it lower or higher, right? They're really factoring in everything, okay? All of the other things that I was talking about. So inflation is an important factor right now. GDP is an important factor. All of these things, right? They take it into consideration. They're not just lightly trying to drop or trying to raise the interest rate. Yeah. So they kept the rate the same on the 7th of May. So if we go into the 7th of May, let's go on the 15-minute, and we want to go back, and we just want to check what was going on. Right. So 7th of May, 7 o'clock here. The market pushed down, okay, and then afterwards it had pushed down. It then proceeded to go up, right? As it went up, we go into the Asian session. It starts to chill in and around the Asian session, and then going into pre-London, the market then continues higher, giving you a new higher high, and then we get a pullback retracement going into the New York session of that afternoon, and then the market then continues higher. So this is actually a clear indication in terms of the market wanting to go higher, but notice the catalyst for it was the interest rate decision. Okay, that was the catalyst for it. So when you factor those things in, it makes your precision in bias in getting your reasoning for the market to want to go higher or lower, it makes it that much more easy to read. So the decision was here on the 7th. It would have been this candle here, pushed up, got a pullback, pushed up the next day, and then we went into that New York session. We retested right here, and then that was the catalyst to then go higher. So what we're getting at, guys, is there's a common consensus and a common pattern of when you backtest these news events, it's actually going to aid you in understanding why the market is doing what it's doing. You're not solely relying on technicals. You're not solely relying on your ability to spot an indicator showing you some type of projection. You're really understanding that the news is the driver if the market wants to go higher or lower. Be all and end all. Yeah? The be all and end all. It's going to go higher or lower based off of news being positive or negative, right? Now, an interest rate decision staying the same. Sorry, here we are. Interest rate decision staying the same. There's no shock factor because the consensus and what they thought the market was, what they thought the decision was going to be, was the same as what it was. So there's no shock factor. There's no surprise. Now, if they was to lower it and the consensus was they was going to keep it the same, there's a surprise. So that's when you're going to get more volatility, more manipulation potentially, and conditions that are there to basically spike you out. Okay, and that's when you want to avoid trading those conditions. So what I'm trying to get at is the more you invest in understanding the fundamentals, the more the technicals will start to make sense to you. Okay, so going into today, right, with us taking out previous highs right here, There's reasons for us to potentially go higher based off of the interest rate. It really depends though, because we have been booming one direction. So since Sunday's open, right? We've boomed up all of Monday going into Tuesday. We had a slight range. We've broken out of the range going into this Wednesday today. So everything has been heading higher for the whole week so far. So we don't know what manipulation may or may not enter the market. If this continues higher, then it's looking like a very bullish closeout for the month. Okay. But what I'm saying is we have to take in consideration the fundamentals as well as what the technicals is showing you, because that is how you're going to pick your spots. And if you don't understand the picture, you don't really like what the market is showing you, there is no problem in waiting for the picture to get better. Some news events I don't trade because I don't have a reason to trade, meaning it's not showing me a clear indication or nothing like that. And that's really important to understand too, because it stops you taking bad trades. Okay. Now, again, the importance of fundamentals is not more than your technical analysis. It's not better. It's not going to weigh more on what the chart is showing you. But nonetheless, when you start seeing the volume increase in the market, the high impact news folders are the drivers for that. Okay, so it's really important that we tune in and we make both of them in sync, where we're up to date. You should want to, as a trader as well, have an interest in the economy, have an interest or some type of excitement in learning about the economy, because at the end of the day, if you have the understanding of when interest rates are going to go down or when they're going to go up, that can actually set you up in life, meaning you can start to think about when's the best time to borrow money or get a loan, when's the best time to mortgage, when's the best time to get a car loan, whatever it may be. If you understand the interest rates, you're going to understand that it's going to cost you more or less in and around if they shred the rates or raise the rates, right? So a lot of people that are in the UK right now that are interested in the housing market, with the interest rates coming down, right? If you was to buy a mortgage 2 years ago, it would be way more expensive than it is right now. So all of this is important in life so that you can leverage the information to make financial decisions for yourself, which is equally as important, right? You're going to have to start your life in terms of hopefully accumulating these assets as you're in a position to do so. But without the information, it's useless. So didn't want to keep it too long-winded, guys. Hopefully that has made sense in terms of why you should backtest news events, right? What I want you guys to do, and let me know if you do it, is go back and backtest interest rates for whichever pairs you like to trade, right? And backtest inflation data as well. Okay, go back and just backtest those two news releases and see how the market behaves in and around, right? Don't forget the calendar button there. Go back and just see how important this data is, depending on the pair that you're trading, how important it is to the economy and what type of reactions you're getting. Let me know in the comments what type of reactions you're getting as well, in terms of if there's a pattern you're noticing or if this is a helpful video, okay? Don't forget to like and subscribe also. And again, if you want access to my school community, which is free, hit the link in the description, okay? The community is growing right now, so thanks for everyone that's joining. Hopefully you're enjoying the value which is being provided in there, which isn't going to stop. And yeah, let's see. I'm waiting on what's going to happen with the interest rate today for the US, so I'm not currently in no trades. Maybe tomorrow we get something. I probably won't trade for the rest of the day, waiting on this data. So let's see what happens, and I'll catch you guys on the next video, okay? Peace, 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 peace. Thank you for watching the latest episode. If you like that, please like and subscribe to my YouTube channel for more content. I'll see you on the next video.